compliment that people take time out of what they're doing in the day to view and listen to my conversations here. Okay, so today's topic is one of my favorites, if not my favorite, because it brings into play a good deal more than simply economics and currencies. As always, if anyone, I have the chat screen up, and let me put up the Q&A screen as well. If anyone has any questions, comments, considerations, anything they'd like to add, please do so, and I will be glad to stop and discuss what anyone has up. What you're looking at is a screenshot of the best-known Japanese equities average, the Nikkei. But we could be, I didn't put up the Dow because didn't have time to put it up this morning, but we could be looking at, it's kind of interesting if we look at these things. That's the Nikkei. Looks like it's doing really well. Here's the Hang Seng. That's doing even better. That's the Shanghai Exchange. Whoa, that's brilliant. And here is the DAX, the German exchange. Is there anything in common with these screens, with these pictures? Of course there is. They're all at or near record highs. That's the DAX. Let me go backwards. That's the DAX. That is the Shanghai Exchange. That's the Hang Seng, and that's the Nikkei. Now let's take a look at Japanese GDP. Remember, that's the Nikkei. That's Japanese GDP. They just came out of a recession with a 4% Q-to-Q GDP. Germany is doing better than the rest of the world. The U.S., we could have the same, doing better than the rest of Europe. I could put up the Dow or the NASDAQ or the S&P 500, and you'd see exactly the same thing. The U.S. is going to be growing probably in the first quarter somewhere between 0 and 1% annualized. Japan grew 4% quarter to quarter. I'm not 100% sure what the German growth was, but I believe it's about 2% in the latest quarter reported. And what is going on in China vis-a-vis the Shanghai and the Hang Seng Exchange, because they both give you pictures of the mainland Chinese economy. Well, the Chinese economy is growing, they think, about 7%. My guess is it's growing half that, or between 5 and half that, something like that. And export orders were out today, and they were down 15% unexpectedly, double what was predicted. With all of these economic statistics, the economic realities, what are the equity averages doing? And of course, this leads directly to the questions of Japan, to the question of today's discussion, Abenomics, and its attempt, which is not only indigenous to Japan. It apparently is the economic policy of choice for the world central banks all around the world since the financial crisis. So a discussion of what is going on in Japan, which has the benefit for us as analysts, as traders, as being the most extreme form of this economic policy, Abenomics, and both with the greatest longevity. Because the Japanese have been doing a version of this policy for about 20 years. So in looking at the effect of Abenomics on the Japanese economy, we're doing two things. Two things we have to do is we have to try, and it's going to be very difficult, but I will try. Try to separate out those effects which are, shall we say, purely economic, that translate across to other economies. So they predict for us what you can expect from this type of policy or this type of this type of monetarist excess around the world, because the U.S. just finished the same thing, and now apparently, despite its talking, like it's terrified of raising rates. The Europeans, remember the DAX. This is the DAX, the premier German equity. It is at all-time highs, while the German economy is trundling along. If not in the doldrums, it's certainly not justifying an all-time high. These kinds of readings in equity averages, when they are sensibly connected to economic reality, are talking about the stage of economic boom. Clearly we're not there. Okay, so we're going to try and separate out, this is going to be difficult, are there particular items in Japan, in the economic structure of Japan, if you will, in the cultural makeup, although I am far less qualified to speak on that. I've never been to Japan, although I've had some very interesting discussions lately, and I'll tell you a little bit about it, with a very good friend of mine, a very old friend of mine, who has just returned from 16 years in Japan. He now speaks reasonably fluent Japanese. He's not married to a Japanese woman. He brought his English wife there, and they have returned. And his discussions, I've been out with them to dinner a number of times, and the discussions on the differences in the way the Japanese economy works, in the way Japanese culture has had its impact in the formulation of the current layout of Japanese economics and the Japanese GDP and the way the Japanese do business, has been fascinating to me, because it's one of the few places in Asia I've never been. And it is, as I've said, and I've said this a number of times, for me, it's the petri dish. It is the forerunner, the example of what could happen in advanced industrial economies. Now, there are specific items that seem to be, again, I'm not a Japan scholar. I'm not an Asian scholar. I only speak English. To my great regret at this point in life, that I never actually fluently learned another language. At one point I was fairly good in Italian, but that was quite a while ago. Maybe we'll take the kids and move to Florence or something, or go visit my relatives there. Anyway, you don't need to hear about that. So there are items, I think, in Japan that exacerbate the particular situation the Japanese find themselves in. But they are not sufficient, in my mind, to explain what has been going on in Japan. The last thing I will try and do is give a little hint of the future, if I can. But in the meantime, let us first I'll go over what everyone knows Abenomics is. They're sort of like the Chinese with their 5 virtues and their 20 goals. They like to name things. Five big items, I think, when the consumer idea culture started to penetrate China was, I think, car, washing machine, dryer, and 2 others. I don't remember what they are. But anyway, in Japan, Abenomics is monetary easing, fiscal stimulus, and reform. By reform, they mean economic reform. The great promise that all politicians do this. This is not Japan. It's every politician that exists in the democratic world says the same thing. Well, we're going to find savings. We're going to squeeze out excess. We're going to make sensible reforms. Most of the stuff never gets done. It's certainly been true in Japan. It's been true in Greece. If you watch the fascinating, in my mind, economic and political fallout from the European, from the United currency, from the euro, because that's really what it is. Nobody wants to say it, but that's what it is. So all of these things are always promised, but very rarely ever delivered. The Germans, about 15 years ago, a little bit less, were one of the countries that actually did do something. They reformed a good deal of their labor practices to permit greater efficiency. I mean, Germany is a very high-wage country. They actually did it. Very few other countries ever have. I pass no cultural comment on that. What did somebody say? The past isn't past. The past is never over. It's not even past. It's with us all the time. And this is certainly true. I mean, we could sit here and talk about some of the countries we're talking about are the ones that were involved in the last great worldwide conflagration, World War II. And the differences that were displayed, I think we better leave that one alone. I'm going to let that one go. I'm going to save that for another one. So, Abenomics, okay? We know exactly what Abenomics proposed. The idea to start off, the yen is too high. I didn't bring a yen chart, but you guys all know what the yen chart looks like. So we're going to devalue the currency. Well, of what value, pardon you, mild alliteration here, of what value is devaluing the currency as far as an economy goes? It certainly doesn't help domestic consumption. The only thing it can possibly help is exports. So the initial purpose of the program proposed by Shinzo Abe, my pronunciation has been corrected by my friend who has just returned, was to promote the Japanese export economy. Okay? That's something that's understandable. It is the traditional, almost mercantilist role of exports. You export more than your neighbor, he buys more from you than you buy from him, you get wealthier. This is the post-World War II development program of almost every developing nation that I know of. They all try to do this. It's one of the reasons there is a demand, as Mr. Krugman likes to say, a demand gap in the world today. Can everyone still hear me? I just got a shock from this my little device here. That's interesting. Anyway, okay, I see a yes, so I guess that's true. Thank you. I thought I had disconnected my my speaking device here, but I guess not. I stepped on the cord. It wasn't actually a shock. Sorry about that. Anyway, so the idea that one can export one's way to success is one of the reasons the world has, as the Keynesians like to say, a demand gap. It's not actually the demand gap. It's that, as I've said before, you can build a factory in 2 years, but to build a generation of consumers to expand your class of consumers appreciably takes a change in attitude. It generally takes a change in generation. And I've mentioned this. My parents, who lived through the Depression, were never consumers in any egregious sense. They never had any debt, on and on and on. They're not the type of consumer that economists want, because economists want to keep the money flowing through to buy the things produced by all these newly minted, relatively speaking, exporting nations. China, the greatest example of this that I know. One of the things that has kept the Chinese economy rolling has been spending by the central government. Building factories? Well, actually, the factories are often built by loans from the semi-private sector, sort of ordained by the central government. But anyway, back to Japan. And that's true of factories as well. So the consumption aspect of the world's economy has been unable to keep up with the supply side. If you're looking at a supply and demand kind of equation, the supply side is far outstripping right now the demand side. So back to Abenomics. The three arrows. I love the way that the Japanese and the Chinese do these things, because it is it makes a much better copy if you're writing about them. You know, 3 arrows, the 5 bigs, all this stuff. So the first thing was successful. And, you know, there is truth to the idea that the Japanese yen was overvalued. The reason for it, I think we all realize, is an oddity of the markets. During the lead up into the financial crisis, one of the favorite currency trades, as everyone remembers, was the carry trade. Well, the carry trade drove the yen to very high levels, 85 or so, I think. And that did make it difficult for the Japanese exporters to succeed. However, remember, there's another side to this. German exporters, when the euro was at 1.4 and at 1.7, survived. So there is a question here which cannot be addressed by monetary policy. The German export machine still produces products in high demand around the world. Quality, innovation, reliability. When you think of German cars, those are the things that you think of. I'm not saying you don't think of them with Japanese cars as well. That's not my point. But relatively speaking, the Germans have been more successful at maintaining a mix and quality of products that the world demands. I think that's still probably true of Japanese cars in a large part, although they're getting a great deal of competition and successful competition from the Koreans. But some other Japanese products, such as electronics, the Japanese were, a generation ago, the world leaders in electronics. They have largely missed the digital revolution, at least as far as consumer products that make it here in the United States. This is an astonishing fact, I have never seen a Japanese cell phone. How is this possible? But it's true. A generation ago, the Japanese were leaders in electronic exports. Every mid-range, it seemed like every mid-range stereo product, sound reproduction product was Japanese. That is no longer true. And as I said, have never seen, has anyone out there ever seen a Japanese cell phone? I've been told that there are Japanese cell phones in Asia. However, I've never seen one, and I've certainly never seen one here in the United States. They're Koreans. There used to be Nokia. There are American phones. There's, of course, ubiquitous Apple. There used to be Motorola and many other ones, but not a Japanese one. So the problems with the Japanese export economy are not solely based on an overvalued yen. That being said, there is certainly something true to a long-term difficulty for the Japanese products based on a long-term overvaluation of the yen. So there was some sense to that move by Shinzo Abe. Because, I remember, we've all, I'm sure, thought of this. Well, the Japanese economy, look at through this period here, right here, right? The Japanese economy is growing Q to Q from before the financial crash. The Japanese economy is growing Q to Q, 1%, nowhere, basically, very, very low, with peaks and valleys, but very unimpressive economic growth. And at the time, the Japanese yen is trading at a huge valuation, 85, 90, very high. So there is truth to that. So that particular item, first item on Mr. Abe's program, has some basis in reality. Second item, let's move on. Let's see if it had any effect, though. Let me see if I have this here. Okay, that is GDP. Let's look at exports here. Okay, so this is Japanese exports year over year. And if you look at this, you can see, because remember, the valuation change started in about, for the yen, about 2013. So both here and here, you did have improvements in Japanese exports, which are, there's some of that which is tied to the change in value in Japanese yen. So there is some, again, some proof of that, okay? Second one is the financial arrow, basically government spending. Now, Japanese have been doing this for 20 years. They've been doing it basically since the stock market crash. Do I have the Nikkei? The Nikkei chart I have here does not go back far enough. You need one to go back to, I'm sorry, I should have brought that. My apologies. You need one to go back to the early 90s to show you the peak. I believe, if I remember, the peak was 29,000, or maybe it was, I think it was 39,000. So the Nikkei is approximately half what it was at its peak. So since then, the Japanese have been doing supplemental budget after supplemental budget after supplemental budget. I remember sitting on trading desks in the 90s, running the Tokyo, the Asian shift. Japanese announced another supplemental budget. The yen does this, goes right back. There is zero long-term effect on the Japanese economy from this type of government spending. The problem with government spending, as in China, is that it does not necessarily, and in most cases does not at all, create new productive assets. It is simply spending. Its purpose is to put money into the economy in the hands of consumers and companies so that they will then spend, and that will embolden companies to create new productive assets. That's the purpose of it. In Japan, it clearly has not worked. This is also, I will say, the purpose of these wonderful equity charts that we're looking at here. Again, let's go through them again. The Nikkei, the Hang Seng, you get dizzy at these levels. I mean, get vertigo from that kind of ascent if you're a trader. The Shanghai Composite and the DAX. I could also put the U.S. Dow and other up there. The idea behind these charts, because these levels are produced not by traders and investors saying the economy is expanding, the economy is getting larger, let's buy companies and hold them that are going to participate in this economic expansion. They're going to return us valuation in the form of dividend, shared earnings, because that's what you are when you buy a company. You're a shared owner. And asset appreciation, meaning equity appreciation. That's not what's going on here. What is going on here, and in Japan, again, another reason why Japan is an example, it has been made explicit. This government spending is supposedly going to turn the dollars over to consumers who are then going to spend, which is then going to get companies to create more factories, employ more people, and you get the much mentioned virtuous circle, which has certainly not turned out to be the case in many of these countries. It's the same idea behind both what the BOJ is doing and the Fed and the ECB and the Bank of England, although a little bit less so. In Japan, the BOJ is now doing it explicitly. Whatever you want to say about the Fed, they bought bonds, basically, securities. They didn't buy equities. Well, in Japan, the BOJ is in the market buying equities. So, yes, of course, the Nikkei is now at 19,000, 20,000, 19,900. The Bank of Japan is buying equities. The purpose is the wealth effect, which obviously is has little effect on the economy. People, by and large, it seems, and this is why this whole discussion in Japan and in the United States and in Europe is fascinating because it is the first explicit use of the central bank monetary power to attempt to influence the consumer psychology of a nation. I always thought it was a thin reed to lean on. It has proven to be so far. And so then they're going to have to go back in academia and analyze what the effect is. And this will take years, of course. There'll be books and other stuff. But it's certainly so far on the empirical evidence that we have in front of us, like what's happening out in the economy and what growth is doing. Remember, GDP, at least in the United States, is getting a different reading. I mean, it's like the unemployment rate in the United States. If they've changed how this is amassed, the statistics, many times over the years, and it always has the effect, as with inflation, of lowering the rate reported. And the reasons are obvious. Politicians prefer lower inflation rates and lower unemployment rates. But if the U.S. unemployment, just as an example, was calculated the same way it was a generation ago, current unemployment rate would be somewhere around 10%. If the labor force participation rate was where it was in 2008, the U.S. unemployment rate would be 9.7%, not 5.5%. So all of these questions about statistics are not immutable, and they serve, and the statisticians serve the needs and to benefit the people who order the statistics, generally speaking, the government people. Okay, so back from that. So back to financial spending. The wealth effect, which the Japanese have now made explicit to, and there's no other way to put this, so I'm going to goose the stock market to artificial levels so that people feel wealthier and they'll spend more money. Ta-da. It hasn't worked. It hasn't worked here. It's not going to work in Japan, and it's not going to work in Europe. It does benefit a particular class, those who hold large amounts of stocks and the people who participate as a trading endeavor in the equities markets. Okay. So let's move on to the last one, and not much is said about this, of Mr. Abe's three arrows. The monetarist arrow has been successful, although somebody was out there today, I forget who, I think a BOJ official was out there saying that 105 is a good level, and perhaps the Japanese is undervalued right here. I don't know why anybody would say that. I mean, aside from the fact that's probably true. If you know, one of the things that is true about markets, which is being thoroughly distorted for the past 6 years, is that markets are vehicles, the best we've devised so far, which of course is Churchill's, up with Churchill's quote, well, democracy is the worst of all forms of government except for all others. So markets are sort of the same way. But we have no better way to determine the price of various items, currencies, debt, money, which is the interest rate price. All of these have been ruthlessly and relentlessly distorted over the past 6 years by what the central banks are doing. So when we look to those markets for a guide, which is what they're for, to provide us with a price guide, a price level, to discover a price level. No one talks about price discovery anymore because the markets are not performing this role. And the distortions that are induced by this, that have induced this, are ongoing. I mean, one of the things that's supporting the U.S. stock market, in my opinion, even though we have stopped quantitative easing here, is that now the Japanese and the Europeans are flowing around. Money flings around the world at the click of an index finger. So what was going to be invested somewhere can be invested now somewhere else. So the second arrow, sorry, let's go back to the first. Actually, let me give you an indication of what has been going on in Japan. This is year-over-year increase in the Japanese monetary base. And you can see through 2013 what was going on. That has tailed off now. So even the actual effect, I mean, you cannot continue to increase the monetarist base. So the logic is that, and this is true with deficit spending, it's true with the monetarist creation of the money base, is that you provide this jolt. Yes, right now that is the monetary base year to year from the Bank of Japan. It's a percentage increase year over year. So you can see in 2013 how much it shot up. The purpose, the way it works, is you provide a jolt to the economy, which then runs on its own. You cannot continue to increase the monetarist base year over year over year, 35%. It just doesn't work. So the tailing off of the increase is telling you that that was their logic. And of course, this is a logic. And there's nothing I've discovered about this which is, secretive or nobody else knew. And the Japanese head of the BOJ, I am not on his mailing list. And if I did, I wouldn't be able to read it anyway, because it would be in Japanese. I'd have to get my friend to translate it. Maybe it's in English. Anyway, so the purpose is to provide a jolt to the economy to goose the real economy into productive activity, into that virtuous cycle that feeds on itself. So there's no surprise that the monetarist juicing of the economy has tailed off. That's the way it's designed to work. But when you hear, and I've heard this, commentators saying, well, it's not working because the Japanese monetary base is not increasing the way it was, but of course it's not. Because that's the way it's designed to work. You can't continually increase the monetarist base at a year-to-year average of 35 and 40 and 50% forever. You can't do it. So that is not really an effective defense of this type of monetarist policy. Okay. So I didn't bring the financial budgetary second arrow of Mr. Abe, but I can tell you about it. I didn't bring it in a graph. The Japanese debt to GDP. I'll answer that, sure, because, here, let me put it back up. They were simply increasing it by putting more money into the economy than they are now. Whatever amount of debt that they were buying from the economy or maybe now back into the equities, they've slowed down the volume. So what went from 35, and you also have, of course, this is a year-on-year chart. So in this, you also have the year-on-year effect, right? Part of this tailing off is the year-on-year effect. As part of this rise is the year-on-year effect. You have to keep that in mind when you look at year-on-year charts, okay? So Japanese debt to GDP internal debt is over 200%. It might be about 240%, okay? That gives you an indication of the enormous I'll answer that question in a second. Of the enormous amount of government funding that has gone into the Japanese economy. We're about, I think, about 70% here in the United States. The Greeks are about 130. The longer and the more countries that develop these kinds of debt to GDP ratios, the less fearful anyone's going to be of it. There was a time when I remember, I haven't heard much of it lately, where economists would say, well, anything over 100% has a serious effect on the economy, a drag on the economy. You don't hear that anymore. What you hear occasionally as well, Japanese debt doesn't matter because it's all held by the Japanese. That is complete and utter nonsense. Of course it matters. Anyway, technically, the government could. The government could print as much money as it wanted forever. It's what the Germans did, the Weimar government in Germany did in the 20s. What they're terrified of for something like that, and I'm sure this would happen, although we don't seem to be in the case for it right now, is unlimited hyperinflation. I remember I was going to send, I was talking about my school, my graduate school was talking about raising money, and I made a joke with a friend of mine who works in the office that I was going to send them 100 million of a currency unit. And of course, what I was going to do is send 100 million of the currency unit of Zimbabwe, because at one point they actually did, I believe, issue 100 million bill because inflation was running at some unknown rate and the money was essentially worthless. It wasn't even worth what it was printed on. So whatever that means. So that's why. That's why governments and central bankers, and these are responsible folks. I'm not saying these are wild-eyed, crazy people who are trying to bankrupt the country. They are actually doing within the limits of their bureaucratic responsibility and their powers to do something. The problem is, I'm not sure that's what the BOJ wants. I mean, honestly, I believe this. What Shinzo Abe wants, what Janet Yellen wants, what Mario Draghi wants, what these people want, I think, is to help the economies revive. It is, in my mind, though, the inadequacy of their tools in the face of the current situation and the hubris. I don't use the word arrogance, if you will, that they can do this. We shall see. Okay, let me return to our topic here. What the BOJ wants to do is to revive the economy. The BOJ has been extremely reluctant. One of the criticisms, and I don't think this is a just criticism, but it has been a criticism over the past 10 years, is that whatever the BOJ does, they don't do enough of it. This is the ultimate Keynesian argument. Whatever you're doing, do more and it'll work. And it's an unanswerable criticism. Because no matter what you do, the people who support this kind of policy and yet see it not working say you're not doing enough. This was always the criticism of the BOJ. The BOJ has now gone full force into this policy. And the question is, will it work? Or is there something inherently limited about what this type of monetarist policy can do in the economy? I mean, the standard critique of the monetarists is, well, inflation is a monetary phenomenon. Well, it seems clear that it's not only a monetary phenomenon. Maybe part of the change here is the ability of, or the inability of banks to get this money out into the economy, which clearly has not happened. Okay, so let's go back to the last arrow, and this is a brief one. So we have monetary policy, devaluing the yen. We have fiscal policy, spending. And the last one is supposed to be the one that's actually supposed to work. The others are temporary. They're to goose the economy, which is going to be made more productive and more efficient by the last one, reform. Reform, of course, is the eternal potential, the eternal promise, the eternal efficiency. We're going to squeeze the inefficiencies out as if they could. It turns out they can't. There are things in Japan that could do, as I said, I'm not a specialist in Japan, but there are things that they could do. And the primary tool, although politicians will rarely say this, the primary tool of economic reform is competition. You can't order efficiencies in a trillion-dollar economy. The Russians tried this. The communist system tried this. It's impossible. It's over the border of lunacy to believe that you can do something like this. So the primary tool, or the primary method, if you will, is to make economies more efficient, is to liven up the competition, to make it easier for companies to go out of business, to stop supporting zombie companies that the Japanese have been doing for more than a generation now, and the Chinese are doing right now all the time. I mean, that export statistic out of China should have everybody deeply concerned about the health of the health of the world economy. But at last I checked, when I came in, the Dow was up 45 points. Okay, that aside. So the reform aspect of it is very, very difficult to do. And in Japan, it's not being done. In Greece, it's not being done. And many other places, it's simply not being done. What else do they think would it do? Well, it would make it much easier for companies to fire people. Guess what? That's not terribly popular, and it's not spoken of. So the last arrow of Mr. Abe's reform, and I don't, and I'm not intending to pass comment on Mr. Abe's motivations, but I will examine developments and see if they're in line with what people have said. And in Japan, as far as I can tell from the English language press, the idea of reform is not quite a dead letter, but it's a very, very slow delivered letter. And it does not look like it is going to have any appreciable effect. So let's look at some other Japanese statistics here to see if any of these effects. Now remember, this program of Mr. Abe has been going on for almost two years. So let's see if there are any actual effects. This is industrial production. Yep. We had that peak when the policy started to get enacted, and look what we've got since then. Not very impressive. This is industrial production in Japan. These are machine tool orders. Uh-oh. This is machinery orders. There's this is, the machinery orders are month to month. No, this is year to year. They're all year to year. So take a look. Okay, this is, go through those again. Industrial production. These are actual numbers. They're not sentiment numbers, right? Not like the PMI numbers. Industrial production, machine tool orders, machinery. Slightly different categories, and I'm not 100% sure what the difference is. These two are very unimpressive. The machine tool orders and the industrial production. So let's look at the retail sales numbers. Remember, right here, this peak and dip is when the Japanese added a value-added tax. Now, like I said, remember the comment that you will hear, and you still hear it, even though it's really, really not true. And I'm going to talk about why. That Japanese debt at 240% of GDP, if that's the right number, I think it is. I'm going to wrap up in 5 minutes. We're going to get to the end of this, so that's good. Is not an issue because it's all held by the Japanese. You know what? That's nonsense, and I'll tell you why. Well, when you have that much debt, to avoid bankrupting your entire country and having everything fly out of control, you need more revenue. What do you do if you're a government to get more revenue? You raise taxes. What happens when you raise taxes? This is what happens. This peak and trough is when they raise the value-added tax. I think maybe 1%. It's not very much. But look at this enormous effect. And what's been going on since then? Well, very little positive movement in Japanese consumption. So the idea that because the Japanese hold their own debt, its enormous weight has no effect on the economy is, of course, dumb, because it's not true. Let's look at the sentiment numbers. Manufacturing PMI. Uh-oh. All of these charts show you the same thing. rising and then failing. This is telling you that the idea of Mr. Abe's program, and the Japanese economy has been in doldrums for 20 years. Okay, more actually. Almost a generation, really. Finally, somebody was doing something, so everybody got excited. But look at what actually happens after that. There's your sentiment numbers. Services PMI. A little more volatile, but the overall trend since 2013 is down. So the statistics that you look at from the Japanese economy do not show a correction. Now, you can make all sorts of arguments about this, right? You can say that the Japanese are trying to do something in a world of overstimulated production and lack of demand. Undoubtedly true. You can't choose your time. What's the line from The Lord of the Rings? You can't choose when to live. You can only choose what to do with the time that has been given you. Same thing for the economies. So the fact that maybe Japan is suffering from a worldwide glut of supply is true, but then you have to figure out a policy, if possible, to take that into consideration to get your economy moving. I think it's fairly clear at this point that Abenomics has not done that. Now, I'm not saying that's because it's the policy with bad intent. It is not. At least I can't think of why it would be. It is more, I think, that the two things. One, that the policy tools available to governments and central banks are inadequate for the current economic situation. Nobody's going to say that. But it's true. I think that's true here in the United States. I think it's true in Europe. It's certainly true in Japan. The second aspect of it is much more difficult. And I'll touch on it briefly only because we're about to end. And it's not... Yes, I saw that. That's the comment I alluded to earlier, that he said the more likely level is 105. Well, somebody's going to get called on the carpet for that one, because that's certainly not what I think the government thinks. But the problem is the yen at 115 and 120 hasn't really done anything, hasn't done what was hoped for with the Japanese economy, and I don't think so. One of the reasons, in my opinion, there are two things going on here, not just in Japan. One of them in Japan more than other places, but the second, the foremost one, is a generalized condition of the world economy right now. It's what I alluded to earlier. There is far more supply created than there is demand. And government intervention distorts economies. It distorts them in China. It distorts them in the United States. It distorts them in Europe, and it distorts them in the rest of the world, in Japan. In order for economies to function, the creation of jobs, the creation of manufacturing entities, service entities, it doesn't have to be manufacturing, of course, to be successful, they have to find their way to make profits. That's what, in a capitalist system, you may not like a capitalist system, you may think it's unfair, but that is what's necessary for the system to function. And of all the inputs that are considered when you design a business to make money, you have to know how much you're going to spend here and here and here and here. And then you sell a product that you hope people will want, or improve an existing product, and the money comes in and your calculations are correct. When the signals that you're getting from the economy are not accurate, two things happen. One, if you try to do the business, you have a much greater chance of failure, because what's being told to you about prices is not real. And two, you're very likely, because you understand some of this, not going to form the business in the first place. And I think you're seeing a lot of that now in the world economy. And this is probably, for Mr. Abe's program and for the other bank programs around the world as well, the biggest issue. That the very programs and the tools that they're using to get their economies through what they hope is this rough patch. You know, kind of what they're betting on is, well, we're going to do some stuff, and then eventually the economies are going to recover and everything will be good. And we're going to prevent a catastrophe, and then eventually the economies will recover on their own. The problem is, and it seems to be, that the very tools that they're using, to the extent to which they're using, are creating some of the drag that is preventing the world economy from recovering, at least strenuously, as it normally would after this kind of collapse. The last item for Japan, and one I can only touch on because I don't think anyone really knows the answer to this. Japan is farther along in the decline of its population than any other advanced industrial nation. There has never been an advanced industrial nation in long-term population decline. Never. You know, what we think of as the permanence of the modern world is a creation of 150 years at the most. I think populations, if I remember, have been rising since about the 17th century. I'd have to check that. For a long time, I mean, for hundreds of years through the Middle Ages, prices never moved. The price of a bushel of wheat in England in 1050 was the same as it was in 1550, very within reason. So the idea of a declining industrial population and its effect on an economy, its effect on entrepreneurship, on new ideas, is one which is really unknown. This, in a sense, is Japan's cultural singularity. It's odd. I've always lived on an island. I didn't intend that to be the case, but of all the places I've lived in the past 20 years, I mean, I was born in Manhattan. I lived for a number of years in Singapore, and I lived for a number of years in Bermuda. These are all islands. And islands have a slightly different view of the rest of the world than the continent. And maybe that's true of Japan as well. I don't really know. But there is a factor here, which the lack of youth and energy, idealism, if you will, hope, whatever you'd like to see it, different spending patterns, whatever you'd like to call it, in an economy may be more eventful for the future than we understand. And this is the last factor in the Japanese equation, which cannot really be answered. But as far as the success of Abenomics, I don't see a great deal of success. Now, you can, as I said, to sum up, blame a good portion of this on the world economy, which is slowing and continues to slow. You can say that there are few other things that the Japanese could have done. I don't agree with that. But looking at the effect of Abenomics as an economic program for the revival of the Japanese economy is a disheartening one, because I don't think it has worked. It must be disheartening as well for the Japanese, because I don't know what they would do otherwise. Okay, folks, I thank you for attending. I do apologize once again for being late. I will put my email address up there. If anyone has any questions, comments, anything, I will answer them as quickly as I can. I thank you all for attending. I hope this has been interesting. It's certainly one of the topics that I find most fascinating because it looks into the future. Again, thank you all for attending, and everyone have a very good day. Take care.